Should we worry about a global currency war now, Martin?
Yes, if we do not get back below 7. So if we start weakening here to 7.2 or 7.3, that's going to escalate the situation rather than actually take it off the table.
OK, then, just very simply, what does it take to get us back below 7 with substance?
We're going to have to see the Chinese authorities, like August 2015 and January 2016, actually come out and actually give the market some stabilising factor. And unfortunately, all of the Chinese leadership is actually away on holiday. They take a 2-week sabbatical out to the beach outside Beijing. And we're very, very unlikely to hear from the key issues, the key players, but the Chinese central bank is clearly actively involved, and they might have to put capital controls in place because the currency will have to be stopped in the short term. And the reason for the China to do that is their stability. Chinese stability will be significantly impacted if they allow the currency to depreciate significantly.
Right, and to that point, Martin, what will it mean for other asset classes and for markets generally if China doesn't step in to defend a specific level but just tries to control volatility in the yuan?
Well, we have this volatility spike already, and that's what they're going to have to move in. But other currency crosses, particularly in the EM space, those central banks will intervene. Already this year, clearly we saw the Fed cut rates last week, but we have 31 central banks that have cut rates this year. Almost all of them are emerging market central banks. This week, as you mentioned earlier in the programme, 3 more central banks are going to cut this week. We will probably see a lot more, and I would expect also that fiscal easing will now especially be talked about more actively, especially in Europe. Europe is going to take quite a significant hit because they are the largest exposure on trade, and I would expect further easing to be discussed there actively.